So today we're going to talk about the big week upcoming for UK stocks because it's going to be a really busy week if you're a UK investor. So let's get started. So first of all, let's take a look at some UK earnings because it is very busy. After the Christmas period, we're all looking to see how the UK earnings are doing because there's been a lot of talk of have companies had a weak Christmas period. So we've heard about the cost of spending, potentially we're going to enter recession. So we want to see if the consumer has been spending during the Christmas time, and we're going to get a lot of that information over the next coming few days. On the UK side, on Monday, obviously all these earnings on the left side have already happened, so you can go check them out. So I'm just going to totally ignore them. On the Tuesday, Petra Diamonds, Wise, a bit of a UK fintech company that we have on the UK market actually. We've got some Naked Wines. I got asked to look at that actually a while ago. I think I said I didn't like it, but I can't remember it too well. Rio Tinto, I know a few guys like that one as a bit of a dividend play. Card Factory, obviously we will be looking at Card Factory. That is one of the most interesting ones that I'm personally look at right there. There's been a lot of talk about, oh well, they didn't do a trading update before the Christmas period, so are these numbers going to come in a little bit weak? I've got to say, I did go into Card Factory the other day, and what I was quite surprised to see is how much the cards have gone up. They're kind of known, aren't they, as the cheap alternative to cards, and that's what's helped them in a cost of living crisis. But I've got to say, I went into the cards the other day, and you used to pick up the cards for 99p, and they were £1.50. So either I don't know if that's put a few people off, or there should be a good jump up in the revenue and the profitability because of those price increases. What I got to say with Card Factory is that I wasn't impressed with the other day is that if you actually go get some balloons from Card Factory, you go pay for the balloons, but then to actually have air put in them, it then costs you more money. It's like, I thought that was a bit like sneaky from Card Factory. I didn't like that, I don't like it when companies go, oh, they buy this, and then if you're going to buy some balloons, you want them blown up. You don't want to buy some balloons and then have to go blow them up yourself. There's no point there. I thought that was a bit sneaky from Card Factory. It's just a couple of things that I noticed there shopping on the weekend when I was at Card Factory. But we'll see what's going on, obviously. Expecting good numbers from them. The Hook Group, obviously a few people have been playing this as a bit of a turnaround play. Obviously, the big thing they've always struggled with is some profitability. So we'll see what happens there. We've got DFS, Ocado, we're going to be reporting. Revolution Bars. I've got to say, I always look at Revolution Bars, and I don't know about you guys, but you ever go in there and they seem so expensive, and you see how busy they are. Like, surely these guys are making money. You look at the gross margins. I mean, I don't know if Simple Wall Street are telling me the truth here, but it says on Simple Wall Street they actually have 76% gross margins. I mean, if that's true, and then I look at the financials here, I mean, they say that the company's still losing money. I mean, they've had a terrible time of losing money. If you look at the past performance, the company has had razor thin profit margins, and in fact for the last few years has actually lost money. I mean, I'm looking at this here and I'm like, if they have them gross margins, and when you see how busy they are, and they're making 174 million in revenue and they still can't make profit, that's not good, is it? Like, I struggle to see how this company isn't making money with how expensive it is and how busy they are. And the fact that if those gross margins are true and they're still not making money, I mean, you might as well pack it up. If you're not making money on how you're operating at the moment, I find that absolutely crazy. I mean, I might have to have a look into it a little bit more. Not from an investment point of view. I could never invest in a company like this that's not making money like this. But just from a interest point of view of like, how do they still not make money from here? So yeah, anyway, they're reporting earnings tomorrow. Anyway, is the point that I was trying to make. Team 17 reporting, obviously interesting. Been looking at this as a bit of a turnaround play, a few things going on. Obviously a profit warning that came out, stocks rallied up a little bit. Interesting to see if we get a double profit warning over the Christmas period or if that's it. So I'll be watching that. I reckon that could move a little bit tomorrow. It'll be interesting to see if there's another profit warning or if they're happy where the financials are actually at. So the big one in the top corner, S4 Capital. Now, I've got to say, there's rumours that S4 Capital has been pushed back to next week. If you actually look at any RNSs, there's no confirmation about a trading update just yet on the site, but a few people are saying it's going to be next week. They normally bring out like, we are going to report our Q4 trading update and so on. So we'll see what happens there. I think that's a really big one for S4 Capital. I would really like to see them put a turnaround now of some bad updates and start moving into a better direction. We've got 888 Holdings. Some of you guys might hold that one. On the Thursday, Doc Martens. So we've covered this on the YouTube channel a few times. I mean, I probably won't mind owning Doc Martens, but it has to be at the right value, and I might be a little bit greedy and go, I've got to wait until it drops to like 40p maybe, and then I'll buy maybe into Doc Martens, but we'll see what happens with them. Obviously they came out with a profit warning not too long ago. Looking at the likes of Nike, JD Sports, I would potentially expect them to put in weak sales potentially. I mean, you never know. Christmas presents, Christmas shopping, they might have a good period, and they might say, you know, that's our last profit warning done. But yeah, once again, it's just interesting to see an update on Christmas period for them. And I know it might never come, but I'm kind of hoping for the days of like 40p if that ever happens. We've got the likes of Flutter that are going to report in earnings. I mean, the big thing with Flutter is if you look at the likes of DraftKings has had a good last year. Flutter has basically done nothing. I mean, look at the price chart comparison between them. They're totally different. What surprised me about Flutter is actually when you look at the market cap difference, but then you look at the amount of employees. You know, when you talk about DraftKings is really more of a tech company with 4,000 employees compared to Flutter's 22,000. I think few people don't realise, like, this is why DraftKings will always be able to get to higher margins than Flutter, because obviously they are just online only, DraftKings. So that's going to make, that's why I was a bit more bullish on the profit margins of DraftKings. But it's surprised to see Flutter so far away from DraftKings, so we'll see what updates there, and then I might consider seeing if I do buy any more shares after their update. Then we've got like the likes of Courage reporting, Dunelm reporting, Hotel Chocolate, obviously one that I used to own. I've now sold my shares, made a bit of profit on Hotel Chocolate, but they will still be bringing out an update, see what their update is. I might just have a look at it, just see what's kind of going on there, but no other interest in that really. AJ Bell are going to be reporting, Frontier, another gaming company, so we'll see what happens there. So the big one down here that you're probably looking at is Boohoo. Same again, there's no confirmation. Look on the Boohoo investor website, there's still no confirmation that they're going to be reporting, so I don't know if that one's going to happen as well, so just bear that in mind there. On the Friday, we've got a few companies, Deliveroo that's reporting, and then it says Burberry on the Friday. Burberry have actually already brought their earnings out. They did a trading update, and it was a profit warning. I was surprised to see the profit warning not drop the shares lower, and that's what I'm waiting for. I'm kind of waiting for like £8 potentially. I know a few people might say it won't drop that far, but that's what I want to wait for. That's where I want to see really low prices. And you got to remember, people said you won't see certain prices with stocks ever again, and then 2022 came along and you had stocks dropping, 50+%. So, if this comes out with one more profit warning, I mean, it could have another big drop on it, so we'll see what happens. So yeah, I want it a little bit lower if I can. And then we've got the inflation data. So obviously we had the US inflation data. We've got the UK coming out today on the 17th, sorry. Last time the consensus was 4.4 and we actually came in at 3.9, which was a big pull forward. It's supposed to stay a little bit flatter this time round. The UK inflation is always a lot more all over the place than the US inflation, but we are expecting 3.8, which is still pretty impressive. If we can hold around the 3.8, that's a big drop. I personally didn't think we'd see UK inflation down in the threes this soon, so that will be pretty good. You can have a bigger drop even lower, like last time, and go into the lower threes. That would be very impressive. I mean, if we were to see UK inflation actually overtake the US inflation, obviously that's at 3.4. If we see UK overtake the US, I tell you, I did not expect that. No one out there would expect to see UK inflation fall below or hit the 2% target a lot closer, faster than the US one, but we'll see. And obviously the big thing with the UK is that we need to cut the interest rates a little bit quicker than the US, because obviously we're pushing towards a recession. So that'll be really good for the UK if inflation can drop a lot faster than the US, and then we're able to cut. We'll actually be ahead of the US, which would be pretty impressive. You don't normally say that with the UK side of it. So we'll see what inflation rate comes out for the UK side of it as well anyway. So yeah, we've got quite a few earnings, like I said, a few not confirmed yet, so just be careful of that. And then obviously the UK inflation as well, and hopefully we'll see some good data coming out from there. So yeah, for UK investors, just be careful out there. It's a really busy week. No US market action today as well. So we'll see what happens there. Hope you enjoyed the video, guys. See you in a bit.